This is Scott from ScottPulsiniTree.com, and this is our fourth Bookmap.com SI indicator setup, the stop and hold. Take a second to please read the disclaimer. Okay. So the stop and hold is a setup where large stop runs fire off, which are retail traders, and instead of immediately rejecting like the Dumb and Dumber setup, the market finds big money participation propelling the market in the direction of the stop run. One can enter the trade if the market holds above or below the stop run and does not immediately reject it, which is an aggressive entry. A high percentage of the time, the market will fire off a stop run, hold, then retest the area, and one can enter the trade when the market order delta bubbles come back in the direction of the stop run, which is the conservative entry, which we've seen many times in these other setups. The market cannot violate the price area of the stop run to take the trade. If it violates, it could potentially be a Dumb and Dumber setup. So we'll see the difference here right now. So this is the first example. Let me clear this out. So this is the Swiss franc 6S, and our thresholds for the Swiss franc are 50 for icebergs and 50 for stop runs. So anything over 50 is significant to take the trade or pay attention. This is obviously almost double or more than double. So we have a stop run, a buy stop run fire off, and you see here with the big blue bubble, it moves above, comes back, retests here, and then off to the races. So usually we enter on the first blue bubble, which didn't occur to way up here. But once the market starts moving away, you can take it. I mean, if you want to be very conservative, you can take it here, but you got to risk an extra 8 ticks on the trade. You don't see this look very often. Regardless, your stop is placed here below this area. So you're risking down to around 64-ish, and again, once it rejects and starts to move away, this is usually the area right around 70. So you're risking 6 ticks to make 30 plus. Next setup is this is crude. So this is a double setup that you've already learned, the Dumb and Dumber. But the first one is a stop and hold, where we had a stop run of 363 contracts, which is here. Big blue bubble, moves away, retests. Again, you didn't really see the blue come in, but you could have gotten in. If you expand this, you could probably find a little blue. You want to be careful expanding it too far, because you're always going to find blue that way. Try to keep it relative to how you had the chart when you saw the stop run. But then it does come back and retest here again, right here. Again, your stop is below this area. So we're looking at your stop would be right around, I'd say, the 31 or 38.16-ish area. And then when you see the blue bubbles initiate, you're in here right around the 38.29 area here. So you're risking about 13 ticks, and you get a 40 tick move here. And where you can get out, again, you can have your own reasons to get out, whatever target you're looking for, a VWAP, daily value area high, Fibonacci, moving averages, whatever you look at, charts. The TAS indicators are obviously the most important thing that I look at, the second most powerful thing that I've used next to Bookmap. But this was, if you just said, hey, I'm going to hold this trade all the way till I see an opposite signal, this was exactly what you got here, where you got the stop run here, immediately rejected. Right, this is the Dumb and Dumber setup, where it gets immediately below. You can enter in here. You put your stop above here. Now there is a chance if you were close, you got stopped out right here, which happens especially in these lighter trade markets, like I've said multiple times. But there's no reason you can't re-enter once it gets back below this area. Right in this area. So again, markets are not perfect. Once in a while, more often than not, you won't even have to sweat this out. But when it does stop you out like this, doesn't mean you just hop right back in here, because it could keep going. But wait for it. If it gets, back below this area right here, then you're back in, and you risk to above this area, right? So you're looking at, you're risking above here, you're risking 38.73-ish to catch 50 plus point move back down. And there was nothing that came in as far as prior stuff, recency, but you're going to see this all the time too. Pay attention to these prior areas, right? This is the exact area that this stop run fired off, it retested and took off, and then there it is again. It comes back, and this is exactly, whoops, wrong thing. This is exactly where it stopped. Right here. Right? It's not a coincidence. This is where it stopped, and then went higher from there. So again, you can be in until you see something current happen, or you can say, hey, I want to see what it does when it gets back in this area, and if it can't get through it, then I'm out. Right? It's a 50 tick trade. So in these two trades, you made over 100 ticks if you played it correctly. The next example is in 6E, the euro. So this was another dual. This is dual, actually, both in the long favor. So you get a stop and hold here, very, very high, 532. So we look for over 100 for our threshold. This was 5 times as much. That was this right here. Didn't even really give you a chance. It did. Never came back again. The aggressive, when you start seeing really big size like this, it'd behoove you not to wait for a retest, because you're probably not going to get it to the exact, just because this is such a high amount that came into the market. But then you also get, as it moves up and it does try to come back, you get a Titanic setup where it runs right into huge buying, 196 against that's twice as much as it for our threshold. We look at 100, it's almost twice as much. And then they try to sell, and then is off to the races. So again, when you get the double setups like this, especially this kind of volume, you could be aggressive. The stop goes below here, and then you catch a huge move upwards, right? And really no reason never to get out. This was close to the threshold here, where they tried to sell it, went a little bit below. Remember, with the euro, again, like crude and gold, it will, this was the buy stop here. The buy iceberg here, the Titanic, and it went a little bit below, but when it got above, then it was gone, right? So don't be surprised, if you enter here and you get stopped out of it, say you entered for a second position, your first position is well in the money, but say you get in again, or you get out because it violates this, but once that's fine, perfectly fine. Again, markets aren't perfect, but when you get back above, this area, you see the buying initiating, you can get back in, right? You get back in here, stop goes right around here, and you catch it, the second leg of this. Again, you're starting to see using this stuff gives you areas to enter, get back in, or re-enter, or add. And you can have some huge runs and trades that make your month. The next trade is this was in crude again, where you get the sell stops 772, which is monster. Obviously, again, huge size. We look for 100 in crude, and this was almost 8 times as the amount in this area right here. Let me clear this out. We're talking here. And then here, it did immediately reject, but I was actually trading this day, and this was very quick. But, this could have been, technically, this could have been a Dumb and Dumber setup. If you're looking at something for the long, this potentially could have been it right here, right? Because we talk about immediate rejection, which it did, which is fine if you take the long. But, if you're looking short, then you just wait for it to break through, right? So if you got long, you would have been stopped out. It is what it is. This is trading. Again, you could be wrong 5 out of 10 times, 6 out of 10 times, and still make millions of dollars trading. So when it broke down through here, and then you got, so that once it violated this area, so it tried to be the Dumb and Dumber, and then the seller was engaged immediately. And again, this was within a minute, if I remember correctly. Now you're looking for the short, right? So it got below this area. Here's your retest that we talk about. Sellers re-engage here. You're short. You risk above this area here, right? So this is this area right here around 37.72, 62-ish, I would say, and your stop goes up here. It's a bigger stop. I mean, you don't even have to risk back above here. I would risk just above where this stop run fired off the first time. So you're looking at about, 13 ticks, 14 ticks, and you catch a big run down. You may get out of some when it runs in this liquidity and you see the buyers initiate, which is fine. You're still making 30, 40 ticks on the trade, and then again, once it gets back through, you can reinitiate if you want as well. But again, even if you got out when it couldn't get through this liquidity and the buyers started to come in, it's still a very nice trade, right? You're still making almost 30 ticks on this trade. So again, there's going to be times that it just keeps going too. So you don't always have to get out of all your position either. You can get out of a part when you get this and say, okay, I'm going to hold one portion of my position until and see if it can get back above here. If it can't, I'm holding until I see an opposite signal. That's how I trade it, right? So I'll have at least one portion on, one unit on, until I see the opposite, till something tells me, okay, this is like a long setup type of thing. Then you have, next example is, so this was a double example here. This wasn't too long ago. This was June 30th. I forgot to tell you the dates too. That was June 24th. You can see the dates up here on most of these. This one I did not have the date. Oh yeah, I did, May 28th here. But anyway, so this was June 30th where you had a monster stop run, 879. Not monster, but it was above average. It was 1.5 times. We looked for 500, right? It was a little more than 1.5. So yeah, the stop run straight through. I mean, not even a question if it's a dumb or dumber, right? If it's a dumb or dumber, you see the stop run, it's immediately below. This just blew through, came back, did its normal patented retest, right? And when you see the buy and come back in, you can be long here, which is right around 52, 50-ish when this this buying engages right here. Your stop goes below where this fired off, right? So right around here-ish. So you're risking maybe 2 points, 2.5 at the most, and you get let me clear this out here. You get the retest. You get the retest, you get the retest. And again, no one said it's going to happen right away. No one said it's going to be easy on your heart, but again, as long as this area is not violated, this is the line in the sand. As long as this isn't violated, you're good. So this took, a half hour of this nonsense of the, the typical E-mini S&P rotation. Looks like you're wrong, looks like you're right, looks like you're wrong, looks like you're wrong, looks like you're right, and then goes again, right? So now you're in this trade. No reason to get out. Now it's actually breaking out of a range on top of it. You get another stop run, right? So this leads me to the next slide, which is just a continuation of this, which is here. So this area is this area here, right? Now you get even bigger stops. 929, 1119. Again, never even questionable if it's a dumb or dumber. This thing is just straight through, right? So now you're just looking for any kind of pullback into, and I know I shared this trade in the room, definitely, but in the trade room, WeTradeDesk.com, but this is the area you're looking for all the way up here, and any kind of pullback into this area. If you start to see the red and then the blue comes back in, you're in, right? You can't be too exact here with this trade or getting in here because this is large size, right? It's not very likely it's going to come back down into this area to give you a much better entry. So, you're in here just because it's such size, right? And if it does, then it's probably going to blow through, and that gives you a short signal because this has been violated. Granted, it's not the perfect Dumb and Dumber setup, but the point is you're looking long, period. But if it gets below here, then you got to start to reassess. But anyway, you're in here. When that buying came back in right around 62.5, your stop goes below here. You're talking about 3.5 points ish, 3 to 4 points at the most. And now this is an ad too, right? Because we were on this before, where you could have been in here around 52, right around here, right around 52. Now you get the second signal around 63. Ish. So now you got two positions on and you see it. It went straight up, right? So then you can start to use your, whatever you're looking at again. I've said it 100 times. There wasn't really anything in the current volume but it never really pulled back. This thing ended up going to 80, 85, I believe, this day. So it could have been a monster trade. You could have two different trades on, separate trades, separate setups. And you know when you're right, or you know where you're wrong, right? So this is exactly what happens in all markets every day. You just keep getting signal after signal after signal. So this is NQ, same thing. I think this was the same day, actually. Yeah, the 30th. So you get the stop run, 182. Anything over 100 in the NQ, 100 stops is significant threshold wise. You get the stop run. You get the pullback, right? That's big. Then you get the initiation. You're long there. Your stop goes below here, right? Kind of where this came in. So you're in here. You can see. So you're in here. Look where this, the stop run was here, and you can see where retests. So you're in. Again, this helps you not be so freaked out with regular market rotations. As long as the areas are not violated, let them rotate as much as they want. You know you're right? You know the odds are in your favor that this thing is going higher until they can violate this area. If they, if they violate the area, if they violate this area, this goes, then you're wrong, right? And maybe you might have taken some off here for whatever reason if you have something else you're looking at. But the point is, let them rotate all they want. You've got the area. If you're right until you're wrong, right? And you're right, and it never violates. And this actually gives you more opportunities. If you did miss this, you can get in here, and then off to the races. Next example. This is gold. This is the final example for this setup. This wasn't too long ago. Actually, this is the same day too. You're going to notice a lot of these instruments are going to have a lot of volume going through the same day. In all these different instruments, just multiple opportunity where you get a 565 stop run. Again, never even a question whether it's a Dumb and Dumber, right? A Dumb and Dumber where you would see the blue and then the red immediately below it. Nothing. It stayed above. Here's your retest. You enter here. Stop goes here. Right? So again, this is a bigger trade, but you got to know this is going to be moving one way or another. We're obviously leaning long, but with that kind of size, you're going to get an outsized move. So you can be risking, a little more than you normally would because you're looking at probably at least a 100 tick move when you see that kind of size. Again, especially in gold, like I've been saying, gold, euro, crude, you'll see a lot of times it'll come back. And go a little bit below, then it'll go. Or you'll get in here, and then it'll make one more try below, then it'll go. Don't be afraid to re-up and re-enter the trade. If you get stopped out once, big deal. You get back in, and then you end up making 140 ticks on this area, or 120 ticks on that area, and then again, this was just like the prior example, the ES where you could have added. Same exact thing. Here's another here's an 826 stop run. Never a question whether it's a Dumb or Dumber, right? That's this area here. Moves immediately below. Retest here. Get in here when the buying initiates again. Stop goes here. You can stop out all of it if you're still long from down here, or you can stop out just this portion, hold on this portion because gold tends to go a little further, like I said. But now you could be potentially into 2 units. You get your move up through this liquidity, kind of hesitates or fails. You can definitely be out of some here, but you see again, here's the retest of that exact area. So even if you got out, now you can get back in. Comes back down. You start seeing the blue again. Re-enter because this area is very, very important. This is a lot of size, and then you catch the move up here, and then you can reassess. So on this liquidity, it blew right through. Couldn't get below. Moved up to the next liquidity. Then when it got here, then it started to, now it started a range trade. So, you're seeing how you can be part of these humongous moves with multiple positions on, right? These are the kind of trades that make your month. So that's the last example for the stop and hold. So you can see there's a huge difference between the stop and hold and the Dumb and Dumber. But these are just as strong as setups. All these are equally strong if you get the right scenario. So that is it for this. We got one left. The fifth, I will be back shortly with that one. Thanks.